Hey everyone, so Q1's come to a close and it's now time to go through my portfolio, and I've actually made 2 new additions this time, and I've actually sold out of a position completely. So let me go through the details of that in a moment, but first I just want to put a plug out there for Interactive Brokers. If you don't have Interactive Brokers, I think you're doing yourself a disservice. They're the best brokerage company out there. Their fees are low, they're stable, they're a public company, so you can look at their finances. They've been around for multiple decades, and I highly recommend using it. It's the one that I use. So link in the description below, and take it for a test spin if you feel like it. Up to you. I've got demo videos here on the channel too if you're interested in learning more about how the platforms work. All right, without further ado, let me go through my my portfolio as of the end of Q1 2023. So as the quarter has now come to the close, I can see that actually things went pretty well for the quarter, but I'm trying to look at a longer term time frame here. So one quarter is not really that big of a deal. I've had some pretty bad quarters in the past. So things that are up pretty significantly on the quarter, Teqnion's up 40%. That's very significant. Judgement is up 36%. Skyworks is up 26%. That's some pretty big increases over just 3 months. But yeah, I've definitely gone down plenty in the past in some of these companies. So a few other, everything else is sort of in the single digits movement. So that's fine. Now the overall, this is the second to last column here is the profit and loss since I've actually bought into that company. So Berkshire Hathaway being the best performer, but I bought that at a pretty good price, as you can see, $172 a share. Now well over 300. And Redbubble, Alibaba, Trulieve are my seriously got belted, paid way too much for those companies, and made a few mistakes there. Now, it's not just, I'm not saying I made mistakes because the stock price is down. I made mistakes because I misunderstood these investments, and the stock market has actually reflected my misunderstanding of these businesses. So I'm glad that, in a weird way, if these were up, I don't think I would see it as a big problem. So it's highlighting the fact that because they're down, I do see it as a problem. Trulieve, Alibaba, Redbubble, all interestingly business to consumer businesses, generally speaking. Alibaba's got some other stuff as well, but Redbubble and Trulieve in particular, they're business to consumer, and that's been getting crushed. All my other businesses, I've really started to focus on B2B businesses. I think I like that better personally. I think I understand some of those businesses a little better as well, and the reliability of revenue, and that's sort of my framework moving forward here. But yeah, anyway, so the big position that I sold out of was Naspers, is surprisingly. Now, the reason I sold out of that was because I already hold Prosus. Prosus and Naspers are essentially the same thing, run by the same management team, owning the same asset in Tencent and some other stuff. I bought Naspers, Prosus, Alibaba quite a while ago when I was really just parking money in cash, where I thought, the downside would be pretty limited here. That turned out to be very wrong, as they fell in half essentially. But Naspers actually went back above my my buy price, and I actually ended up selling them for about an 8% profit on that. And the reason I sold was because, like I said, I've already got plenty of exposure to China. I've got plenty of exposure to that particular business in Tencent through Prosus. It's actually quite a large chunk, which I'll show you later in the video how big of a piece of the pie that is. Having Naspers and Prosus was just overkill. So I sold out my Naspers stake. I kept Prosus because the Naspers stake being in South Africa is just hitting some regulation hurdles there, and Prosus is just a little bit cleaner, being on a bigger bigger exchange. That just gives even though the discount it's actually not too far off each other anymore anyway. It has closed a little bit. It used to be Naspers was even a bigger discount. Now it's not as crazy. So I was happy to move away from Naspers, and I had to choose one. So I chose Naspers and kept Prosus. So that was what I did there. Now with that money, what I then ended up doing was making my 2 new purchases and adding a little bit to some others as well. But CSAM down the bottom is a company that I have invested in, and Nelnet is a company that I invested in right at the end of March. Both CSAM, I've done a video on the channel before. Nelnet is one still to come. I'm very happy about those investments. I'm looking to be a very long-term shareholder in both of those. CSAM, I think, has a little bit higher risk just because they've got a bond repayment that will need to be organized next year. Nelnet, I think, is very secure and safe. So different types of investments there. I'm very interested to see how they perform over the next 5 to 10 years. But there is what it looks like at the moment. You can have a look at my average purchase prices that I've made and the time when I made those purchases as well. So, all right. So on the screen, I've got my comparison to the S&P 500. I've started tracking this in January 2020, and I think it's interesting to see how this progresses over time. The S&P 500 is beating me at the moment. We're both in the positive, which is nice since that period, but I am got a bit of catching up to do. That's okay, because I've learnt a lot, especially that first year or two from January 2020. I learned a lot about myself and a lot about investing and about what this is when I was building like out a checklist, and I was starting the YouTube channel, and I've really changed a lot as an investor since then. So as I'm growing, I'm hoping that my performance starts to catch up and then starts to exceed the S&P 500. But you know, the numbers are the numbers. I had to start from somewhere, so I started from January 2020, and need to be accountable. Now, sorry for the messiness of this pie chart, but I know I've got a lot of cleaning up to do here. Like, there are some companies in here that I've marked that I'm going to sell when they reach their fair value. So essentially, I'm parking my money here because I think they're cheap, undervalued, and when they do reach their fair value, I'm going to sell them off and reinvest into what I think are superior businesses. But I'm okay at the moment, just sort of taking my time to do that. I'm not in a rush. So you can see my prosus and my exposure to China being prosus and Alibaba is quite a big piece. It used to be over half of my portfolio with Naspers as well, and now I feel a little bit more comfortable being about a third. So hopefully that will grow, especially that Alibaba one. That would be nice if that goes even close to where I paid for it. That'll turn into a pretty big piece of the pie. Everything else you can see there, some of the little smaller ones like Trulieve, Redbubble, they were 5 and 10% stakes at the start, but because they got punished, they're now down into like the 1% range. But that's okay. I understand. That's why I've got more than one company here. And yeah, this is what it looks like at the moment. This is definitely going to change as I slowly cut out some of these businesses. I don't think I'm going to be adding too many more in the future. 1 or 2 more, maybe at the most, over the next few years would be good. I'm looking at one particular company at the moment in the UK that I'd be interested in adding another company to this list, but the more I learn, the more this will change, and I understand that, and I know that's not the right thing to do. I need to be able to make a decision and sit on them and give them plenty of time to play out. But the thing is, I'm learning more all the time, so it's going to take some years until I get to that point where I can set and forget my portfolio, and I'm not there yet, and I understand, and I think that's okay. And I think maybe the lesson that I'm taking from this that I'd love to share with you is that trying to get this thing perfect is not. It doesn't work like that. It's like a work in progress, I believe. Like, I have to go through some mistakes like Redbubble, and I have to go through some ups and downs. And like Alibaba, I don't think is a mistake at all. I actually think that's a really good investment. I actually sold some puts recently to get some more Alibaba. But the share price falling by over half has been testing me, and I think that's a good thing. We all have to go through these times. It makes us better investors, and I hope that I'm going to lead by example here as best I can. But at the end of the day, I'm doing this for myself, and I understand where I'm at. I'm in a pretty good place about my portfolio and what it means, and how I'm going. I've got a bit of a good plan in place, I think, for the next couple of years and how this is going to look. I would say I'm going to get to about 10 companies in total by 2 or 3 years' time. That's probably what I'm aiming at. I don't think I'm as ballsy as Charlie Munger or some investors who only have 2 or 3 companies. I don't think I'm smart enough to be right like that. 10 feels good for me. I feel like that's enough exposure to get the upside, but be diversified enough that I could be wrong. So that's how I'm looking at it. I hope you've enjoyed this. In 3 months' time, I'll be doing this again, so you can see what changes I've made and see how things are going. Feel free to comment anything you like about the strategy or what you'd recommend, or even other companies that I haven't turned over that stone yet and I'd be interested in. As you can see by my portfolio, these are the types of things I'm interested in. A lot of serial acquirers in here. I think like a lot of these businesses have so many businesses underneath them that the businesses themselves are very diversified. So I feel really solid about this portfolio and where this is going. So, okay, I think that's enough. I will see you in the next video.